Hi guys, welcome back to one of my weekly analysis here with Fractal Trading, how to catch the major market moves. And this week is especially interesting due to the Brexit vote. It has come true. The British are leaving the EU. Now, since they didn't have the euro as a currency, I guess the structural changes will be significant, but for other countries it may be even worse, and the consequences may be even worse. Now, when it comes to trading such an event, I cannot stress enough how important it is that you follow your rules. It doesn't matter what kind of event might come about. It doesn't matter if you know about it, or if you're there, or if you're not there, and or if you consider it to be significant or not significant. This week, risk management again played a very important role, and the trading system following the rules is only the second part. The risk management, keeping your account in check, not taking on too many positions, not taking on too many positions that are correlated or inversely correlated 100% more or less, and keeping your emotions and your psychology in check. That's actually what makes trading the game that it is, and what makes it so hard. And that's probably the reason why less than 5% actually have long-term success and have something to show for it. Now let's have a look at some of the major markets. We can't cover all of it, but I'm trying to incorporate anything of the major markets that is of interest. Here we're looking at gold, and we have been talking about gold. It's been going up and penetrating the balance zone more and more, especially a couple of weeks ago. Here we saw that price really dived into the balance zone, found support at the red line, and it has bounced out. Until Thursday this week was extremely boring. Prices came down to, again, close to the upper border of the balance zone. It meets the moving averages right there, and these of course act always as a dynamic resistance, dynamic support levels. And due to the heavy action resulting from the Brexit decision, you get this market to move up quite a bit, even though it wasn't able to stay at the weekly high of 1355. It's still closing above the breakout level, and this of course is a valid breakout, and it occurred last week already. Now we have higher prices, even though it didn't close as high as you may wish for, to really see that the breakout after the second week of being in that long position is actually really happening, and it's going to take prices further up. So this will be yet another wait. Some patience is needed again over the summer, probably, to really see this gold market take off to the upside. As I said before, we are looking at a target of new highs. It's not going to do that in a straight line, of course. It may take many months until it gets there, but that's the new trend direction. In my point of view, if we can make it out here this week, is not stopping us out. This week is not giving us any worries. The price is above the fractal, so let's just pay attention to that and follow the market wherever it wants to go. Another interesting move due to the Brexit decision was seen in the euro dollar. The downtrend is being corrected for more than 1 year now. You have this resistance line that is created. Price has tried to penetrate it on this candle as well as on this candle. It tried to close above it. It failed, and now what you see is, you never know when this happens, but when it does happen, you get this fractal in the middle of the balance zone. It's being triggered below the middle of the balance zone or outside of the balance zone, and if it does get triggered in this way, in the direction of the old trend, which is down in this case, you want to enter, you want to sell. And as you can see, similarly to gold, you have prices penetrating the breakout, going lower but not being able to stay there, bouncing off, rejecting these low levels here, and closing on the breakout level at just around 111. With this fractal being taken, it's quite possible that the euro dollar is actually gonna go down, continue its trend that we saw here, and maybe heading all the way down to a level of parity with the US dollar. Let's see if that is really going to happen. If it is going to happen, then we will get a really nice move where we can profit from a little bit. So the Brexit actually triggered this breakout here after this long time of a correction. Taking a look at the indices is always very interesting, as the stock markets, of course, are affected by such huge events as well. The Dow Jones Industrial Average has been moving in a side move for all of this time. This is the middle of 2015 where this started, and what you have is you have these moves to the downside, to the upside, to the downside, and now to the upside. You get these fractals always or almost at the same levels, and these mark again support and resistance areas. Down here you can see it really nicely how you get these long wicks. None of these candles, none of these weeks is able to close below this support, which actually gives this level a really strong or high significance. Right now, or with this week ending, we have again a price having triggered a breakout to the downside, kind of considering just by looking at the nature of this market right now that the next target will be the support zone, and this is even underlined or even more supported by the candle, the shape and form of the candle of this week. It really looked like until Thursday night, if you've been following the markets, as if these indices are making new all-time highs. I mean, they are not far away. You have this in the Dow right there at 18,365, at least here in this CFD pricing, and it's not very far away from this week's high of 18,118 to hit that. But the correction that is going on doesn't allow price to move out higher. Instead, it bounced heavily off of this resistance and is now below the middle of the balance zone marked by that red line, and you get this fractal here which is triggered below there, so you have every reason to sell on this really high time frame, and the next target really could be all the way down here. We don't know if it's gonna go there just as easily and straight as it did here. Maybe it's gonna even go lower. Maybe it's never gonna reach that goal. That's why you want to have your risk management in place, because you don't know if you will get a pin bar or something like that right here at that blue line with a nice long wick, and then this market is going to continue up despite the bad news in a fundamental way. At least if you look at it in a fundamental way, the Brexit will cause insecurity, uncertainty for the coming weeks. It doesn't really matter if the real or if the true crash actually didn't even happen on this Friday here. But let's wait and see how markets are going to perform next week. In the British pound dollar, of course, the British pound, looking at the currency immediately or directly involved in the Brexit action, is very interesting. The short, which is actually the overall trend direction, you just have to look at this long-term weekly chart here. On the left side of the chart, the price is high and more or less continuously going down. On the right side you will find prices significantly lower, 4,000 pips almost lower. So this is very tradable. This is actually very nice. You want to keep selling into such a market that is trending. If you were to look at the monthly chart, you would see that it really is staying below the balance zone and this trend exit moving average. So 3 weeks ago you get this fractal, well, not 3 weeks ago, 5 weeks ago, you get this fractal. It's been hit 3 weeks ago, and you're staying in that position. The last week was actually not that great. You get this pin bar. It didn't really matter to me. I just kept my position. But even though the overall trend direction is continued, and we have a weekly close this week at 136.59, before it came there, due to the heavy influence of the Brexit event and the optimism actually that went on until late Thursday, you get prices actually hitting those fractals here. If you enter on this sell fractal, your stop is exactly there, on the other side of the balance zone, on the other side where the fractal is, exactly at that point where the market changed its mind and decided, no, I'm not gonna go higher. Here at that blue line, you can see how it bounced off there pretty nicely, and I'm gonna continue my downtrend direction. However, before it did that, it stops you out. Now, again, this very nicely underlines that the trend following or trend trading concept works very well. It takes a long time for the market to actually put in a reversal. You're never wrong to keep on selling or buying into an established trend after it has corrected in a minor or in a major correction. But that doesn't mean that every trade or every entry for continuation or for an initial trend entry will always just work. You absolutely will get stopped out. Most trend trading, trend following systems won't even give you a 50% hit rate. So you really see that these markets will kick you out, and they will hunt your stops, if you want to put it or phrase it like that, before the continuation is actually happening, with such a great event that we saw Thursday night here in Europe. You just have to calculate that some stuff like that is going to happen. You do want to manage your risk. You cannot put all of your money or half of your money or 20 or 10% of your money on this one trade, because it is going to get you on the wrong side, and it may even be accompanied by some gaps, and you must account for all of these things to happen, especially when you have a known event coming up where you just know that it's going to be big. So calculate your risk, put in your order, follow your rules. You never know when they're gonna work, when the market is going to take off and when not. There are other forex pairs than the British pound dollar that worked very well, where you did not get stopped out here. British pound Australian, British pound Canadian, just as an example here. Also going to cover a stock here this time in this weekly review here, since the indices came off their highs and they are kind of bouncing off that resistance, as we saw in the Dow. I'm always interested, or sometimes interested, in looking at some individual stocks, maybe some high volume, some high liquid stocks. And a couple of weeks ago I mentioned that Apple broke this support. You have these two fractals here, and since it's been in such a long uptrend, look at that, it's a huge uptrend. Some sort of correction, some sort of bigger correction, something like this that you see in here, maybe something that or something like that, something bigger anyway, is necessary at some point, and will hit the next support area that I marked by this black line down here. The support created by the two fractals I just mentioned was broken a couple of weeks ago, quite a couple of weeks ago, and prices came back into, or were trying to come back into, the equilibrium zone. This is where they want to be, this is where they want to stay, but as you can see in this case, they actually failed at that resistance and are now approaching this support area again. And this is also, of course, we get a bearish week this week due to the Brexit. You have a lot of uncertainty all throughout stocks, all throughout the sectors. And now let's see how this is gonna come down, if it's gonna come down or if it's gonna bounce off again. But as you can see, we do have potential for a new down move in this market. Thanks a lot for watching the video, and see you next week.